Moving iron.
Hello and welcome to Moving Iron Podcast Markets with Chip Nellinger. This edition of Moving Iron Podcast is brought to you by Axon Tire, helping dealers move more iron for the past 100 years. For more information, go to axontire.com. Axon Tire would like to give the loyal listeners of the Moving Iron Podcast two great gifts. This month is switched up a little bit. If you got your gloves last month, you're going to enjoy the Alliance camouflage hunting hat that you can have to work with those gloves. So it's like a whole ensemble, Chip. You get a whole thing there. It's
I like it.
Of sorts. So if you want one of those, send an email to marketing@axontire.com and they'll send those over to you. Or you can send me an email at MovingIronPodcast@MovingIronPodcast.com and I will get you the $50 off of your Moving Iron Summit registration fee, sponsored by the folks at Axon there. So you're going to take care of that too. So if you want the hat, send an email to marketing@axontire.com. If you want to save money, send me an email at MovingIronPodcast.com and we will Moving Iron Podcast at MovingIronPodcast.com, and we'll get that taken care of. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. Whoa, excuse me. At Valley Transportation, our goal is to help you reach yours. And no matter how you buy your ag equipment, whether it's from a dealer, an auction, or a private party, AgDirect can help you finance it. You can even apply online at agdirect.com. Learn more about your financing options at agdirect.com. Tractor Zoom has access to over $20 billion in heavy equipment sales. Tractor Zoom's Iron Comps is the industry's trusted solution for transparent equipment values and auctionable pricing insights. This podcast is also brought to you by Anvil AppWorks. Their Dealer Connect CRMI app with their integrated inventory management is an affordable Salesforce-based solution for your dealership. Create connected customer experience and transform how you work today. Chip is with Blue Reef Can't talk today, Chip. Blue Reef Agri Marketing out of Morton, Illinois, and he's nice enough to come on and talk about what's happening. So, Chip, how you doing, man?
Hey, doing well, Casey. I'm happy Thanksgiving to everyone. I am ready to eat some turkey. This is my favorite. My kids are older now and out of the house, so Thanksgiving has always been one of my favorite holidays. So I'm ready to eat some turkey.
It's what I like about Thanksgiving is that there's no expectations. Really, I mean, there's no Christmas expectation. You don't have to dress up in some crazy house.
That's right.
And we just show up and eat.
Show up and eat
and watch football. That's all you got.
I like it. I like it.
That's the entire purpose of Thanksgiving. So yeah, it's one of my favorite holidays too, and it's a good time to get with your family and talk about what's going on and see how things have been and just enjoy that time. But there's we're kind of headed in that time of the year, Chip, where the holidays really start playing with what we see happen in the marketplace. And, you've been doing this for a long time. The thing about the holiday periods that I've kind of figured out since I started doing this podcast is that either nothing happens or everything in the world just absolutely explodes. One of the two things. So I guess over the course of your career doing this, Chip, how often do you see that ladder where everything just kind of goes off the rails? There
is some truth to that, Casey. It's not the majority of the time, but it is something you have to kind of watch out for. Part of the reason of that is, and we've been fighting that even last week, but for sure earlier this week, there's not much going on news-wise, and the volume kind of thins out. And so then if something does happen news-wise, you don't have as much volume as you usually do, and you get these moves that move further in both directions because there's not as much volume. So the next 6 weeks can get a little treacherous going into, between right now and the new year. And there are some things, out there that could move. Obviously, we're going to, in a couple of weeks here, have another decision by the Federal Reserve on what they're going to do with interest rates.
Yep.
That's going to continue to affect the dollar and the financial markets. So that's going to, as a byproduct, weigh on, the commodity markets. You've got a war going on still in Ukraine. That's always something there. And weather in the Southern Hemisphere is starting to get more and more important. By the time we get to New Year's here in a few weeks, that weather situation down in Brazil and Argentina is really going to drive things. Right now, I would say the market's perception is that things are pretty good. And I'd say 55, 60%, maybe 65% of Brazil looks really good. the southern areas, which by the way are some of the most productive areas of Brazil and parts of northern Argentina, are getting really dry. So, that's going to be something that could spark, a weather market type situation. And who knows, out of the financial markets or news about the war, kind of getting into winter time frame. And I'm certainly not a military. I was not in the military. I just, my brain, I was a history minor. So I do kind of, have that at least, but my brain tells me, particularly in the Northern Hemisphere, as you go into winter time frame, that, it's kind of maybe hunker down type situation, hold your positions, maybe not going to see major pushes one way or the other in this war until spring. Who knows though? So that's always out there, and a possibility to throw these markets one way or the other. So we're going to have an interesting few weeks as we go into the end of the year. Got a crop report in a couple weeks. That's going to give us nothing on this December USDA crop report. They're not going to change yields. They don't do that in December. We'll have the final yield adjustment and yield survey in the January report, but they are subject to demand changes of world production numbers. So it still will matter here. I believe that comes out on December 9th. And so, it's just it's a good time of year, I think, too, to kind of, as harvest wraps up, kind of get the pencil back out and say, all right, what was our crop size here? I think that's important for people to kind of refigure, particularly over here in the Eastern Corn Belt, where, a lot of guys had best ever or second best ever yields on corn.
Mhm.
Well, if you go into harvest or through the growing season, you did this exercise, say last winter or ahead of spring, and you figure, 210 bushel yield, maybe your long-term APH, and you ended up at 250. As you come back and say, all right, here are my expenses, I have 40 more bushels per acre, that increases your profitability. It decreases your cost of production per bushel. So I think this time frame is a good time to, slow down, eat some turkey, and then maybe get the pencil out and say, all right, where are we at? What's it looking like for this 22 crop based on, where our yields were? It's a different discussion out your way, because, then that's going to be, all right, where does, what's our crop insurance protection? Where does that backstop us? What does it look
Yeah.
like from that perspective? And it's also a good time to talk about 23 and think about, what the strategy is going to be for this 23 crop, because, I don't want to be a doom and gloomer, but we've had a good run in ag. And I think that we're getting kind of long in the tooth on this bull market. And we're just kind of getting on the razor's edge, as inputs have just come up, ramp up, ramp up, ramp up. Everybody kind of in the same boat now with these high input costs, and the profit margins are going to be really dicey going forward in 2023. And stocks are tight. So, so much of it's going to hinge on what the crop size is in South America. If they have a big crop, we could kind of fall back over the cliff and resupply the world and prices go lower. If they have a weather problem, and arguably they already have a weather problem in Argentina, it's just, is Brazil going to, join in any weather problems? And if so, we're going to keep this thing tight and explode these markets higher. So you got a lot of volatility potential here in the next few months.
Yeah, a lot of moving parts. We've been talking about that for quite a while. And, I think the one, we talked about wheat last time, what that looked like and how I saw those moving parts, what that looked like. But I guess, the one thing out there, I think people are, because of how, the price of beef, when you go to the market and you're looking at, buying some people are anti-turkey and they want to get the ribeye steak, or they want to get the beef tenderloin or whatever it is. And, you start looking at that kind of stuff now, and you're maybe paying $18, $19 a pound for that stuff. Might change their mind pretty quick how much they like turkey after they start looking at that. But that hasn't slowed demand when you start looking at the beef, how beef is playing out in the marketplace. What are your thoughts there? And then, kind of reflecting back on the year and what you see moving forward. What are your thoughts there, and how do you see that continuing through 23?
Yeah, that's going to be a real wild card too. And a big part of this whole commodity equation is how does the economy hold together with these higher interest rates and higher inflation? We've already started to see some hints, some layoffs and job losses at some particularly tech companies, but Google and some of these companies are starting to see some layoffs. It's really surprising. We just had a cold storage report out, and it did show slightly lower month-to-month drawdowns on pork and beef, but both of those compared to a year ago, are 6-8% higher than a year ago. So I think part of what's doing this and helping hold things together is we've had a really good export program on both pork and beef for quite a while. So that has really helped. And I know it's a head scratcher, with just looking here, our local, one of our local grocery chains is a Hy-Vee. And so, I was looking at the mailer of, different holiday Thanksgiving specials. And I noticed the same thing. I'm flipping through this little booklet and, I'm like, it's like $169. And I thought it was a ham at first. I'm like, what in the world? But it was a prime rib. But still, it's getting pricey out there. So that's going to be a big part of this. How does the consumer hold things together through, higher fuel costs, higher inflation costs? How's the economy hold together so far? And how do our exports hold together? And, in spite of the dollar being pretty strong, we've really had some pretty decent export demand for pork and beef. And if that can continue into 23, maybe we can kind of get through, a little slowdown in the economy. I think the other thing that's starting to happen, we've drawn down the breeding stock of this cattle because of a 2+ year drought. And we talked about this last time a little bit.
Yeah.
I think you're about to the end of that. And we had the cattle on feed report a week ago. The numbers are down. There's some of the smallest numbers on feed that we've seen in a long time. So I think you're towards the end of the liquidation of breeding stock, right? I mean, if you're in the 2 years now plus of drought,
there's
no feed left. There's no grass left. There's no cows left.
Right.
And so you're at the end of that. And if things do normalize, we can get some better rainfall, better pasture conditions into spring and summer. And you get ranchers wanting to, buy cows again, buy heifers for breeding stock. That's going to tighten up the supply of cattle, and things could get pretty explosive. And maybe not explosive, but it could tighten things up enough that you could get through a dip in the economy if we're going to see that. So there's some things to be friendly about. Back on the corn side of the equation, we're certainly, about $1 off of the highs from this past summer in corn. Exports have not been real stellar. If we do see some better production out of South America and, maybe get these corn prices eventually back down towards 6 or below, that could be something that gives the cattle guys out in the plains at least a little bit of, breathing room. So, there's that potential as well. So, this livestock thing is going to be interesting. The hog side of the equation has been, because of labor, because of high construction costs, inflation. You've not seen the expansion that high prices would have normally brought in, and so that's kind of helped hold the hog market together. And in spite of higher feed ingredient costs, we're getting through. I'm not saying it's record profitability out there, but we're holding it together in spite of some real challenges out there on the livestock side.
Yep. So you've seen on the energy side, let's talk about that for just a second. Oil this week has just been a roller coaster, man. I mean, it'll be down 6, up 3, down 6, down, all over the place, just getting battered around. OPEC has come out and said, hey, we're gonna cut production, keep that price up, and we're gonna continue to do that. Continue to try to control the price as much as we can to keep that price up, so we can, control demand and supply and everything else that we see out there. But they say that, and then the price of oil goes down, and then they say it again, and the price of oil goes down. That's like the complete opposite of what you think would happen. So I guess as you're looking at the energy market, Chip, what's driving some of these things we see happening?
Yeah, I think the thing about crude oil here, I think crude oil, for me anyway, you can look at all kinds of different, factors and reports about the economy and, are we growing, are we slowing down? Just look at the crude oil market. I think it's a good, kind of proxy for what the perception is in the marketplace for growth. And if you go back, there was a change, in my opinion, a couple weeks ago, maybe it's going on 3 weeks ago. We had the CPI out, and it was still high. It came in like 7.2%, but it was lower than what was expected. And certainly from a 1 month perspective, I think the previous month was like 8.2 or 8.3. So when the market saw that, I think the expectation was, or what the crude oil and the energy markets are telling you is that, okay, these interest rate increases are doing their job, and we're going to have a slowdown in growth, a slowdown in the world economy. And I think the crude oil market started pricing that in. We're quickly $15 off the highs in crude oil. The other day, what happened was, I think there's some political stuff going on too. And, I'm talking about fake news and manipulation. And there was a story out a couple days ago that the Biden administration, or possibly Biden himself, was going to pardon the Saudi king for the killing of Kagoshi, the Wall Street Journal reporter a few years ago.
Okay. Yep.
And because he's a diplomat, and still denouncing, it was a bad thing to do, but he's a diplomat, so we can't prosecute him. He's going to have immunity. And so that there might be a little quid pro quo. So actually the other morning when crude oil was just getting pummeled, you look 1 minute, it's down 50, then it's down $1.50, and then it's down $4.50. There was a story out that OPEC was actually going to increase production, which is just counter to what they said like 3 weeks ago.
Right.
So at first it was like, okay, there's the, I'll scratch your back, you scratch my back type of a thing. But then 3 hours later, I don't know if it was Saudi Arabia or OPEC, one or the other came out and said, yeah, that we didn't say that. We're not thinking about that. And crude oil actually came back and erased all those gains. It was down almost $4.50 at one point, actually went higher on the day. I think it's still closed a little bit lower. So you're kind of getting this market a little overstretched. Now, the reality is, this is long-winded. That CPI report, part of the reduction in inflation, if you want to call it that, the way they calculate the inflation reports is a little head scratcher to begin with, but you're still like 7% year over year inflation, pretty hot. Part of the reduction month over month, there's a lot of seasonal adjustments along the way. And so particularly in housing, and that's part of, the basket of goods and services that they look at. So there was a seasonal reduction in housing that might have just been a one-off that kind of helped. So I'm not so sure that a 1 month snapshot means that, we're going to go back to 2% inflation and everything's going to be peachy keen. So the market could be misreading this. And when we get into next month and get that next CPI report, it's going to be interesting to see, because if it ticks back up, you're going to see another, big push higher in energy. So we've got problems. We got refinery problems. Diesel stocks are extremely tight. So I would think you're getting into areas here that are going to, be somewhat supportive. It probably bears watching if you're a user of diesel. If you're a user of natural gas, you typically have a strong seasonal tendency just because there's more usage in the winter. There's a strong seasonal for price, for temps to get pretty cold in the winter and increase usage. And so natural gas, diesel fuel probably need a close look if you're a strong user of those products, because we've had a big sell-off in here, and I think you're probably getting close to support. But it's interesting if you watch crude oil. We've got our own problems here. Obviously, we're anti-fossil fuels. Europe's anti-fossil fuels, but the whole world still runs on fossil fuels. So
yeah, we're anti-fossil fuel till we're not.
Yeah, and now we've given all the leverage back to OPEC.
Yeah,
they don't want $50 crude oil, so
why would they?
They're the supplier to the world now. I mean, it's not rocket science, guys. All right, like they're looking at that saying, well, if Europe's not going to produce anything and they're shutting fossil fuels down and pipelines down. And the United States, Biden's sitting here saying we're going to no more drilling, no more oil, no more coal. Guess what? We've got what the world wants, and they're going to pay up for it. So I wouldn't be surprised if, at some point in the next couple of quarters, we don't see a return to $100 plus crude oil. But some of that's going to depend on the strength of the economy.
Yep.
And I think there's some people thinking we're going to go kind of immediately into a 2008 type crash here. That's possible. If you see that, it's probably going to reduce energy prices and commodity prices for a period of time. But if we don't, if we just kind of trudge along here, energy prices is probably going to be one of the first things that snap back and rally this thing. If you ever get China open back up and changing their policies, and that's a big if, that's going to put a floor underneath the energy markets too. So it's going to be, this thing is always like a chess game, like a 3D chess game. Now it's like 4 or 5 dimensional, and there's so many moving pieces to it. It's interesting trying to figure it out, but it drives, all this uncertainty drives volatility. But with volatility, there's also opportunities to position yourself to kind of get a competitive advantage out there. It's takes a lot of different moves on the chessboard, though. It's not just one move. You got to think about 4 steps ahead sometimes.
Yep. And and to that same point, Trudeau's doing his best to do the exact same thing in Canada. So I mean, you're shutting down 2 countries that are oil independent, energy independent from producing. So yeah, only good things come from that, Chip. So you got to remember that. Well,
the scary thing is now they're just pushing this, one world order. I mean, the guy in France is just outwardly saying it now. They're not even trying to hide it. And Trudeau's, I can't say it nicely, so I probably won't say it. I'll get canceled. But Trudeau's right there,
Yeah. Yep. Agenda
sucking up to everyone because he wants to be the king of the new world order or something. I don't know. That guy's scary.
He's a different fellow. All right, man. Good stuff as usual. Chip, folks want to reach out to you and get more information about what you're doing at Blue Reef Ag Marketing, or get a little help on that marketing plan they're working on. What's the best way to do that?
Yeah, best way is just give us a call, 309-550-7213. We'd love to chat with you. We've had a couple people, a couple of your listeners on the podcast reach out as well via email. Mm-hmm. So if you get on our website, which is Blue Reef, www.bluereefinc.com, give you all that information, our contact information. So we'd love to chat with you.
Right on. Well, good deal, Chip. I appreciate you being on the podcast here, and happy Thanksgiving to you and your family.
All right. You too, Casey, and all listeners, happy Thanksgiving. And let's hope the next 6 weeks bring a little bit of opportunity here. This market's been pretty dead. So we need some life back in these markets.
Absolutely. Good deal. All right. I'm Casey Seymour with Moving Iron Podcast. Check me out on Facebook, Twitter, and Instagram at Moving Iron LLC, LinkedIn at Moving Iron Podcast. And you can go to the Moving Iron YouTube channel. That's just called the Moving Iron YouTube channel. So check that out. And that'll give you the video version of this podcast here. You can also go to Moving Iron LLC for everything Moving Iron related. So with that, I'm Casey Seymour with Chip Nellinger. Squeeze some iron, folks. Gobble, gobble. Out.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here.